Ladies and gentlemen, welcome. This is a new type of video I may do also in the future. I call these videos pair analysis. So the idea is to focus on a single forex market and to analyze what happened recently, what's going on right now. The focus is not on predicting the next moves. That's in the other type of videos, as you know. I publish on this channel live trades, live analysis, market overviews, etc. But this particular format is a little bit different. The idea is to give you kind of the big picture in a selected pair. So I would like to start with the euro dollar here. This is a 4-hour chart. Right now it's trading at 1.18949. And as you can see, we have longest still in the market just above the current price. So the overall fight, the price already came down so much already before and right after the last FOMC conference. So what's going on in this market? Well, it has been moving in a consolidation between the 1.224 and 1.21 level, let's say. And then, finally, the longest came in thinking that they buy a reversal up once this low here from June has been cleared. This buying activity by the dumb money traders, the green bars, led to a complete down move in euro dollar because the smart money algorithms detect that and push the price down against those dumb money buyers going for the stops, etc. So this is a great example for a proper squeeze. The dumb money was kept on buying the market, trying to average down, trying to buy reversals up, to enter cheaper and cheaper. All this buying activity over weeks led to a massive downtrend in euro dollar, and you can see it here with the squeeze indicators, a proper dumb money squeeze, long squeeze. And we trade short when we see those kind of setups. Yeah, we trade short against those buyers, knowing that even though if we in this particular case enter expensively into the market, it will work because the dumb money is just trying to buy a market which is doomed to go against them. So right now above the price we have quite some longy positions, as you can see. On the y-axis here, there's actual resistance, so it's less likely that the price goes up and goes for these stops. They also are rather too far, so I would rather think euro dollar comes down once more, especially if the dumb money keeps on buying. Can even retest the low and go for this empty stop here, the orange line. Yeah, if no green bars come in, it will go down and retest the low. Yeah, and the second squeeze can come. So the overall bias remains bearish on this. I should explain, I've done it in another video I think, but let me repeat it. So we call the dumb money, but they are not stupid, okay? They are actually making a very rational decision, because when there was a rate announcement, they expected the rates to be unchanged and therefore the euro dollar to go up as it did before. But obviously that becomes a self-fulfilling prophecy in the sense of, because the dumb money buys and assumes that the price will go down this time, because the smart money algo takes into account what the dumb money is doing. That's exactly what happened here. Yeah. So the dumb money made a rational decision by trying to buy euro dollar, and indeed the rates were unchanged. But as we know, remember New's principle, the smart money of course moves the price the other way and suddenly creates some kind of dollar strength. Yeah, so euro dollar goes down because the dollar gains value against the euro. And this is purely manipulation driven, okay? It has nothing to do with fundamentals or anything like that. People always fall for the Lydic fallacy. They try to find a narrative after the fact saying, oh yeah, in the conference he said that inflation could raise and therefore the rates can be increased in the future and so on. No. It's about the market structure, okay? I hope this is clear by now. I'm doing this for a few years. I don't want to get into another rant or anything. So let's focus on the market. Let's look. Okay, so that's a 4-hour chart. Let's quickly look at the hour chart. There we go. You see, of course, more detail. Yeah. So we see this move with the rates, and look, after the move, I remember I made a video, the dumb again and again and again, trying to buy the reversal, So what do we have? A failed reversal, failed reversal, failed reversal, stop on down, taking out the stops of these people who try to buy and place a stop below the low. And here we see the squeeze, okay? These here are all short opportunities, as we know. And this is not delayed anything, this is live, okay? We see this information live. And we acted accordingly. You see a bit of shorties came in, and then did a pullback, but then longest prevailed. So here we see the longing position, others medium-term stops above the price. It's not impossible that the smart money wants to take out those upper stops first before going down, but it won't be, because as you can see, if they go up, they can let those longies into profit, and they don't like it. Remember Lassa principle, even if they fish up, down again. Okay, let's do something else. Let's actually zoom out even more. Let's talk a bit about the day chart. And sometimes, zooming out gives you loads of key. Even if you are a short-term trader, you need to take into account higher time frames. Okay, the markets are fractal, as we know. Of course, the first thing you notice is this mess of the last 2 weeks, which led to this down move. You notice that the smart money cleaned all these moving averages, because the smart money likes to place stops below and above those moving averages. So these are targets for the smart money. We see here quite nicely in the better way the overall dynamics. So euro-dollar, then we had some kind of normalization and some kind of retest of the highs, and now you see with this recent down move that we are in some kind of consolidation, and of course, while the long-term bias stays rather bearish, and I expect euro-dollar to come off against those longies further, even if it takes out the upper stops first. We see that, yeah, this is quite classic consolidation, okay, on the day chart. Of course, above the high we have medium-term stops as well, those yellow lines, but they are far away. And of course, if, for example, we would have a short squeeze, suddenly massive shorties came in and the price goes back into the range, they would try to, eventually take out those stops at the highs. But right now, we have the opposite scenario, okay? So there's still room to the downside against the longs. And that's the beauty of the market causality. You can pretty quickly, make a very, very solid analysis, especially if you know what's going on here. It's not rocket science. Let me please emphasize it once more. Once you study it, you will get the okay. Now, okay, fine, but let's also go a bit to the past as well. Okay. Let's see what happened in the past. So this here is an interesting scenario where we had shorties dominating the market. That was in October 2020. Look, where the consolidation going on, yeah, then the price tests the highs, and the dumb money thinks, okay, I do a range trade, I short the market down, I sell euro-dollar. Because so many dumb money traders are selling euro-dollar at the high, thinking they get a cheap entry back towards the lower side of the range, what happens? Break out to the upside against this, yeah? Complete punt to all the highs. Hundreds of pips. Okay? These are situations where the causality is your best. It's amazing. And the ones of you who have backtested a lot of strategies and work on expert advisors and robots and stuff, the market modes change in terms of pip range. Okay, if you have a simple robot, it will never survive, the next market period. It will just start losing money and die off. But what does not change is the market causality, you see? The price is the output entered, not the other way around. Yes, the chart pattern plays a role, as I've just shown, but it's all about what does the dumb money do? Where does it buy? Where does it sell? Where does it place its stops? How does it, interpret the current market? That's what it's, and this will never change. It never changes. You understand? Sometimes the dumb money goes low. Sometimes stops are far away. Sometimes stops are close. Of course, sometimes the pattern is different. That changes, but the underlying principle I'm showing and exposing, they're not changing. Okay. And that's what you can see. You can see it with the live analysis now. You can see it with the market moves before based on the dumb money activity. As simple as that. Yes. It's not rocket science. There is no randomness. Okay. Understand the implications of that statement. Markets are not random. Okay. Forex is completely manipulated. There's only randomness for the dumb money. There's or close to randomness for the smart money who control these markets, okay? The cartels. They're laughing while the dumb money comes up. They just fall victims to those nasty traps. Okay? And my work here is about creating a more balance, okay? A more even playing field again, okay? This is the answer of us traders to the smart money market manipulation. My work here, okay? The SMEFX project, that is the answer. To give people the tools to be able to be on the right side, to prevent being stop hunted, okay? To see the market from a completely different angle, the reality behind the market. Not some nonsense, yeah? Such as supply and demand or head and shoulders pattern or whatnot. Okay, this is all nonsense without the market causality, the market position hunting, the interaction of the two. It's about maintaining some kind of economic plausibility. It's possible. It's on the shorter time frames. It's about fake support, fake resistance. The same old tricks I have from time now. Okay, but in those kind of videos, I do not want to tangent. I want to focus on the pair. I want to show you what happened in the past, what happens now, the big picture in that particular pair. And here with the higher time frames, you see it all makes a lot of sense. So to summarize all this, if more longies come in, it goes down and retests the lows, goes for the lower stops. If they can, they will try to clean the counter side before. If shorties come in, they will do that. And so we remain short and medium term bearish. In the very long term, once the lower stops have been cleaned and the longies are kicked out, there's a dumb money switch from longies to shorties. So we have red bars, and the dumb money now tries to sell the dollar. Guess what? It will reverse up, go back up into the range, and then if the dumb money would keep on selling over weeks and so on, it would retest the highs. But I don't see that happening. But of course, I do not predict what the dumb money does. I just react to what the dumb money does. Okay, that's another point. So there's no need to predict what the dumb money does. Just look at your chart and see, okay, that's what they are doing. That's the situation. That's what I need to do in response. Okay, trade what you see, not what you think. We don't need to guess. Guessing is for amateurs, okay, who just see a naked chart and have no clue what's going on, and come with their theories and just burn money until their accounts are blocked. That's the nice of speculative traders in FX. The ones or the worst are people who post scams on Instagram and whatnot. That's enough. Okay, so I would like to just to one more comment. That's a bit more advanced, but since we talk about euro-dollar here now, on the big picture, it's actually interesting. Market correlations, we know that the stock indices went up a lot, all-time highs, etc. If the euro-dollar goes down against those longies, okay, this could be a leading indicator for a stock market correction. Yes, that's a very interesting topic. It's advanced, but basically, in a nutshell, We have seen that before, but you would need to go back what I'm saying is, if let's say we have again down money long is coming into the market, euro dollar goes all the way down, so the dollar as a result gets stronger against the euro. Often this can show that, you know, the stock market will also do a correction down after. To be seen, that's an interesting case. So just keep it in mind. You know, the dollar likes to lead stock indices. The correlation between the two can change. Okay, we have seen situations where the correlation even went negative. Even here at the beginning of the year, where the stocks went up and up, and okay, but on the higher time frames, there is some degree of correlation because obviously the stock indices and the US dollar also have a dependency. Okay. I wish you all the best. If you like that type of video where I go a bit into depth and I show different time frames of one particular pair only, and I show the recent past and what could be the next scenario, etc. Please leave a like, please let me know, and I will do that for different pairs. All the best.